All right, welcome everybody. Hope you guys are doing well. If you can't join us or you're watching the recording, this is March 3rd. So we're trading on the Tuesday, the first Tuesday of March 3rd. We are trading right after. So it's slow trading right now. And the big takeaway from yesterday's information was that we've got news that G7 ministers were going to be coordinating this morning to help kind of come up with like a package or a solution to fight off the coronavirus. I guess you could say that. That news came out yesterday, which is what caused the rally in the stock market, right? And so that rally in the stock market took place all day yesterday, and then it stopped short today this morning. Now, what happened this morning is that the G7 finance ministers came out and they don't really have a plan. They don't really have a plan, guys. We're kind of screwed, right? Look, it says here, some of the major headlines is that, G7 ministers ready to take action if necessary. Now, the only thing that this is doing for the market is it's bringing a little bit of stabilization, right? So the market has rallied on expectation that we're going to get something. And that something is G7 ministers basically saying, if something happens, we're ready to take action. Right, so that's kind of causing like a mixed bag of feelings for the markets right now, which is why if you take a look at one of the primary markets, the S&P 500, we rallied yesterday. So we did like a 70-point rally yesterday, and then we just kind of stabilized right here. So the key this morning, guys, is to take a look at how the North American traders will interpret this information and this signal from G7 ministers and central bankers, and how they interpret this information will affect market sentiment. So if this is viewed as positive, take a look here on the S&P 500. We're resisting right here above 3,100 on the S&P 500. So if we break that, we're going to continue to go higher, and it's going to be very risk on, and it's going to spill over into other markets. So for example, for dollar yen, if we get a break to the upside in stocks, you want to be long dollar yen. For example, for bonds, if it breaks to the upside, you want to be short bonds. You want to be short gold if the stock market breaks 31 and continues to move up. If it doesn't break 31, we find resistance and it sells off from there, you can expect the reverse to happen. But this morning's trading is very sideways, and we're looking for further market sentiment towards which direction it's going to go, risk on or risk off. If we take a look at Ghost Squawk indications right now, we can see that Ghost Squawk indication, this was just neutral a moment ago, but now we're on to risk off, right? So even Ghost Squawk is picking up headlines and is shifting more towards the risk off. Right now, I don't feel like there's any good trading opportunities at the moment. We really have to wait till 9:30. The reason being is, again, if we take a look at all of these correlated products, we can see here that with the S&P 500 kind of stalling out right about here, you got the S&P 500. It broke out and it stalled out right about here, which is the same thing that's going to happen to the bond market. It's the same thing that's going to happen to gold. It's the same thing that's going to happen to yen. So again, guys, the way you trade this morning is whichever direction this goes. Whichever direction this goes is going to have a similar and correlated reaction to the market. So if the S&P 500 goes up and we get a green arrow in the S&P 500, you can expect bonds to come down. You can expect gold to come down. You can expect dollar yen to go up. If you get the opposite, if we get selling in stocks, if we get this taking place, you can expect this to go up. You can expect gold to go up, and you can expect dollar yen to trade lower. Now, in my opinion, I think this is my opinion only. I believe that we're likely due for a rebound, right? Because we've experienced some of the worst selling that we've seen in like the last 10 years. It all took place in a matter of like a week or two, and the selling in the stock index hit hard and it hit fast. Obviously, if you guys know markets, there's always room for a rebound after a large move like that. That rebound is what you're seeing here in your chart. We rebounded right here, and now we're bouncing back. This right here, guys, is the next pivotal point in the market. It is, the market is going to interpret this as will world leaders come in with enough ammunition to help stabilize the economy? If yes, stocks are going back up. If not, stocks are going to go back down, and they're going to experience a lot of volatility until we get further further directional signals from G7 leaders and world bankers. One key thing that I want you guys to note from yesterday's event, if this is anything of like a precursor, is that if you take a look at the Australian dollar yesterday, the Reserve Bank of New Zealand, okay, so the RBA, the Reserve Bank of New Zealand, which is the first central bank to meet this cycle. So we can see here, one second, here, right? Hold on, right here. So the RBA met yesterday and they made a decision with regards to their interest rate. So they cut interest rates to 0.5%, right? So this here is not updated, but it should be. I don't know why it's not updated. But they slashed interest rates yesterday. And the RBA was the first central bank to meet, okay? Guess what? Bank of Canada is going to be next. They're meeting on Wednesday. That's the next central bank. Bank of Canada is also probably looking to slash interest rates. If the RBA is an indication of what's to come, if they're the leader, then most central banks following will slash interest rates as well. So I'm looking for a potential cut to interest rates for Bank of Canada, possibly on Wednesday. And then as we move towards the 18th, 19th, where we get the ECB and the Federal Reserve, look for these central banks to have some type of stimulus package as well. All right. So when it comes to cutting interest rates, I want to point you guys back to the Australian dollar and yesterday's move. I always discuss this in class, okay? When a central bank cuts interest rate, when they make a move on interest rates and they reduce interest rates lower, it should have a negative impact on the currency. However, this is the reaction yesterday at 10:30, okay? So the Australian dollar actually went up. And this could be extremely counterintuitive for those who are new to trading and who do not understand market expectation, okay? Theoretically speaking, when a central bank cuts interest rates, it devalues and lowers that country's base currency. So why in this scenario, when the RBA slash interest rates, the Australian dollar actually spiked up higher? That answer has to do with market expectation and is one of the most important lessons that you guys need to learn about market expectation. So prior to this March 3rd event, right, the market coming into this event begins to take a bet, right? You look at the schedule and you see, okay, on March 3rd, the RBA is going to meet. What are the chances that the RBA is going to slash interest rates? That betting pool can actually be seen on a function in Bloomberg called the OIS, overnight interest swaps. It is a market for short-term betting on interest rate products. So like repo products, very short-term fixed income assets that the market can bet on. And the markets can either buy or sell fixed income assets based upon where they believe interest rates are going to be in the future. And if you guys were in yesterday's class in bonds, I talked about how interest rates, overnight interest rates, have a direct link to bond prices. And participants can trade the expectation of interest rates by buying or selling bonds in the market right now. So as a result, the market begins to expect that the RBA is going to slash interest rates, and they formulate this expectation well ahead of the actual event. So if you take a look here at the Australian dollar, we didn't just sell off on that day. We actually rallied. The sell-off on that move happened weeks before, right? So if you take a look at the entire month of February, you'll see that the Australian dollar is going down lower and lower and lower, right? And a quick economic lessons for you guys. One of Australia's biggest trading partners, and probably their most important trading partners, is which country? Do you guys know?
I don't know.
China. China is Australia's biggest trading partner. China is like what the US is to Canada. That relationship between Canada and the US is the same relationship between China and Australia. Very, very similar, okay? What has happened to China over the last month in terms of factory, in terms of outbreak, in terms of economic output, China has slowed down. They've slowed down in terms of their factory. They've slowed down in purchasing. They've slowed down in consumption. They've went into quarantine. As a result, Chinese money is not being spent around the world. So what country gets hit pretty hard when China tightens up their wallet? Australia. Australia gets hit pretty hard. And that's why the Australian currency has been devaluating. But to further add fire to that devaluation is that as China slows down and the Australian economy is getting hurt, government and central banks, specifically the RBA, will take a look at the Australian economy and be like, hey, if this continues to happen, we got to start looking at slashing interest rates. And so they begin giving the signal of, hey, we're going to cut interest rates well ahead of that event, which is why the market knows how to continuously sell Australian dollar into that event. And so that event is what we call pricing in. The market is taking a look at forward indications from the Reserve Bank of Australia well before this event and taking in clues as to what their decision is going to be. And based upon the clues, the overnight index swap market resoundingly decided that there is a high probability the RBA is going to slash interest rates yesterday. And prior to yesterday's event, the market sold the Australian dollar hard into that event. And so when the RBA actually met yesterday and cut interest rates, you have this type of reaction in which the market actually went up. This is why I want to stress why a lot of new traders avoid news trading, because they do not understand this concept. The concept is plain and simple. When an economy slashes interest rates, it devalues their currency. The currency should go down. But in terms of day trading, sometimes you can formulate the opposite contrarian day trading strategies if you understand what has happened leading into this released event. That is how you trade this market. So hopefully that clarifies the fact that news trading can be extremely profitable if you understand what you're doing. And secondly, news trading can be extremely counterintuitive if you don't understand the concept of expectation theory, if you don't understand the concept of forward guidance, and you don't understand the concept of market positioning into an event. Okay, so hopefully that clears out things for you guys. For this morning, I am looking at the stock market to trade. I think one of my favorite trades this morning is probably going to be dollar yen, simply because dollar yen, if we look on a small time frame chart here, guys, dollar yen, we did pretty much this. Hold on. Oh, we broke. Actually, I got to go to a bigger time frame here. Okay, so we broke this major 110 level, traded as high as 112, and then now we're back down to this range right here. So there's a very big range right here in the dollar yen right here, and I think we're gonna be confined to this range right here. So we may begin to find some buying support on dollar yen right here. But again, the indication for me this morning is going to be watching the S&P 500 stock market and seeing whether or not the S&P 500 stock market rallies up or gets sold off. The second thing here today, guys, is that there's not too much news this morning, right? So it's a big news event week, but there's not too much news this morning. We do have ISM PMI, which is going to be big. That's going to be released at 10. Other than that, that's pretty much it for today. So 10:30 is going to be the real action in the market. 9:30 is going to be the equities opening. You're going to have volatility, but because the ISM numbers are big, this is going to be extremely important. In fact, I think the ISM numbers could have the ability to sway market sentiment and positioning. So do watch out for this specific number being released, okay? ISM just is the Institute of Supply Management, which is a global PMI number. Hold on one second here. Tuesday. Co-diagnostic stock tumbles Maxim downgrades following massive yeah, sorry, my mistake, guys. ISM's not coming out today. This week. This investing calendar has been really messing me up. Okay, sorry about that. Give me 1 second here. Wednesday. Okay, yeah, so the ISM manufacturing PMI is coming out tomorrow, not today. So it's just a little mistake there. The ISM business condition doesn't move markets that much. So there's not much to look forward to in terms of market moving data for today. That's going to be tomorrow. You have the ISM numbers. Also the ADP numbers.
To discuss further cuts in oil output.
Okay, so those are going to be big ones, but other than that, not really much big events for today specifically. So again, I'm just going to be watching the stock market to see what's going on and playing off the markets like that. Do you guys have any questions about this quick, just general market recap?
No.
No? All right. So we'll just. Okay.